This no hard credit pull business card earns 3% back on everything, and right now it comes with a $500 intro bonus. Credit limits go up to $100,000, and even people with fair and low personal credit can get accepted. It's called the Revenue Card, my partner for today's video, and I'll show you a way to turn your entire Revenue credit limit into cash so you can pay any business expense with it. So Revolut is a product owned by an alternative financing company based in New York, and they want to provide funding for your small business even if you have less than excellent credit, so you can focus on building up and building out your business empire. Your Revolut business card limit can go up to $100,000, and if you spend $5,000 within the first 3 months, you earn $500 as an intro bonus. Every time you swipe or tap the card, you're earning 3% cash back on every purchase too. No need to remember categories or worry about hitting spending limits. There's no restrictions. You can send cashback rewards to your connected business bank account when you hit the $10 minimum redemption limit. There's no annual fees, and while it operates like a credit card, it's technically a merchant cash advance. This means instead of a fixed loan amount, you get a lump sum that's paid back through a percentage of your future sales. This can be a game changer for businesses with fluctuating income, since you never really know what your revenue will be like from month to month. They report your good payment history to Dun & Bradstreet to help you build up your business credit score too. There's no APR attached to your card. Instead, you'll have what's called a factor rate, and it can vary from 1.1 to 1.5, which means 10% to 50% interest. So if you borrow $1,000 at a factor rate of 1.1, you're not dealing with complex interest calculations. It's straightforward. All you do is multiply the amount borrowed, which is $1,000, by a factor rate of 1.1, or 10% in this case, and you'll pay back $1,100 total. The extra $100 is your interest rate for the advance. There's no compounding interest, no surprises, just simple math. And the Revenue Card has an extra feature that lets you turn your credit into cash instantly. It's called a flex line. Think of a flex line as a financial Swiss Army knife for when you can't swipe your card. If you have to pay a vendor who doesn't accept credit cards, you can just use your flex line because it gives you access to liquid cash. The amount you can spend isn't set in stone either. It ebbs and flows with your business's performance. If your income is looking good and your business bank account is healthy, your flex line goes up. If you're carrying more debt or your income dips down, it adjusts accordingly. It's like having a credit line that breathes in sync with your business's financial health. And you know, your business is unique, and your repayment plan reflects that. You could be looking at daily payments if you've got a steady influx of cash, or maybe monthly payments if that's how your cash flow rolls in. It's all about what works for your business. These payments are designed to be flexible with your business needs. So to get approved for the Revenue Card, your business needs to be official. We're talking registered in the US and not just you flying solo as a sole proprietor. They want to see you've been in the game for at least 6 months as a fully formed business like an LLC. You do need a business bank account with less than 3 days in the negative per month. Your business must generate at least $10,000 in monthly revenue, not profit, just revenue, and you must maintain a daily balance of $1,000. The approval process can be done within an hour, and as for accessing funds, you could be rolling in the cash within 24 hours, and the whole time your personal credit score stays out of the picture. It's strictly a soft credit pull from start to finish. The Revenue Card does a few things well, the biggest being it's accessible to business owners with less than excellent credit. So if you have poor or fair credit, but a good business, then you should still be able to get funding to grow your business. It gives you a great flat rate of 3% cash back on all purchases, which is better than any other business credit card that I've seen. The credit limit seems to truly grow with your business revenue, and just like your credit limit grows with your business revenue, your payments will too. So if sales are down, then your business pays less too. You get a dedicated account manager that knows your business for customer support as well. And if you need longer to pay off your balance, the factor rate could be an advantage because interest on APRs compound over time on a monthly basis, while factor rate fees, on the other hand, are a one-time fixed amount. And I'll leave a link to the Revenue Card below so you can learn how to apply for that. So who is the Revenue Card for? The Revenue Card would be great for your construction company when you need to float those hefty material and contractor costs while you wait on a payment from your clients. And maybe you run a consultant agency and you operate on a project based payment system. If your next payment doesn't come for 1 to 2 months, then you could use the revenue card to pay for office rent and employee salaries until you get paid again using the FlexLine feature. And the revenue card is great for high revenue businesses making over $100,000 per month because in those cases, they offer much higher credit limits than the $25,000 to $50,000 you'll often get with the big commercial banks. It's an open fact that revenue credit limits go up to $100,000. And imagine having access to 100K anytime for operating expenses or building out a new location for your business or buying out a business partner. That's a massive financial shovel to get work done. Now, here's what I don't like. There's no grace period, so you will always be charged some amount of interest for using the card. The factor rate it uses to calculate your interest will typically be more costly in the short term than a traditional business credit card. And if you're on a daily payment schedule and you somehow miss the payment, then you could be charged a daily bounce fee of $35. It also lacks typical perks associated with business cards like travel benefits, a rewards points program, a 0% interest period, and an extended warranty. Now, that leads me to the question, who is this card not for? I say this card is not for brand new startup businesses since you need to have an established functioning business with consistent revenue to get approved. It's also not for business owners who always pay their statement balance in full every month and avoid interest charges. There's just no way to avoid interest of some kind with this card. But I know there's so many business owners who ruin their personal credit to get their business up and off the ground. And if that's you, then this will be one of your few options to get funded quickly. So don't forget to hit the link below to get fully approved for the revenue card without a hard credit pull and earn 3% cash back on all purchases with a $500 intro bonus. Thank you so much for watching.